All right. Morning, everyone. Coming to you live from AG Capital's Cape Town headquarters. All right. Let's get it going. Last night's session, a bit of a non-event again in U.S. markets. Actually, no volatility at all for the first time in a while. You know, we talked about yesterday the streak of 1% moves that we saw in U.S. equity markets over the past probably 20 sessions or so. Obviously, last night that came to a bit of an abrupt end. There was not a lot to really look at yesterday. We did have crude oil inventories beat expectations. The crude oil inventories supplies, just are off the charts in terms of historical averages. So that's obviously going to probably keep a ceiling on crude prices for the near term. Other than that, no real significant data, nothing of any real significant interest that actually came out. We did last night after hours in the States have a brief spike up about probably 12, 15 points in the S&Ps on the back of a quick news headline saying that Europe and Greece had reached an accord. Within 3 minutes, that was negated by another headline out of the ECB and out of Greece. So we started to quickly drift down from there. Obviously, this morning we're slightly off the top. So that just kind of goes to show you. I think it's quite amazing how well markets have actually held up in the face of this. Obviously, someone somewhere is just utterly sure that this deal is going to end up getting done. But it is what it is. The fact of the matter is, if we do get something out, most likely markets are going to make a pop on that, because that's a real negative that's hanging over the market, obviously, at the moment. I believe, if I'm not mistaken, Greece runs out of cash within the next 10 days, or 10 or 12 days, if they don't get an extension of the bailout terms. All right. Looking overnight, we have a Nikkei, a nice pop. It was closed in the previous day's session. Obviously, big move up on the back of the weaker yen. We finally broke through the 120 handle. I think at one point last night we actually traded to 120.45. That's obviously giving a big boost to the Japanese exporters there. Other than that, very little action or leadership out of the other Asian markets. Australia was soft. We've been really soft 2 days in a row on the mining stocks, diversified miners in London. They haven't had as much follow-through in Australia, but obviously that's dragging Australia down nonetheless. They also had some negative data there. I think unemployment data was at 12-year highs. We continue to see new lows out of the Australian dollar, which is really under significant pressure. So I think just continues to add fuel to the fire. People that are attached to the China story right now are just getting beat up all over the show. So probably going to happen for a little bit longer. All right. This is a chart here from Charlie Bilello again of Pension Partners. You can see here a number of energy industry layoffs. And I had another chart that I wanted to actually show you guys this morning, and we're showing the where crude oil inventories are relative to the historical norms, and they're literally out of this world high, like 100 million barrels higher than the historical averages, and way higher than they were obviously this time last year. So this is really important. The one thing about these job cuts and these rig cuts that have been happening is that they don't really start to hit the oil supply for another kind of 4 to 5 months. So that's all started to happen since maybe late December, beginning of January. But before that has any chance of really factoring into oil prices is all the way out into closer to June. What I think also is really interesting, I read another article last night about the short interest on the energy sector in the States, and we're running it, the short as a percentage of free float on the energy companies. The S&P 500 is running north of 9% at the moment, which is the highest level since 2008. And I think those aren't crazily high numbers, but the bottom line is if we do start to get a real reversal that there could really be a lot of people running for the hills at the same time, and you could really end up seeing sort of a squeeze play. I think we've been seeing some sort of that in Sasol. I don't know what's going on with the volumes in the States, but I've never seen anything. I've never, ever seen volumes this consistently high over the last 2 weeks in Sasol. We've been doing probably on average north of 1 million shares every single day on the U.S. market, which is probably 5 times what the average daily volume is there. Right, getting into corporate action, we had a few companies reporting this morning. Goldfields out with headline earnings per share at a loss of 43 cents. Definitely looking soft relative to expectations. Revenue more or less in line. Divvy per share looking a touch soft. Their all-in sustaining costs actually look quite good. I'm not sure exactly what the expectation was for that number, but if I'm not mistaken, that is about $20 or $30 lower than it was in their prior reporting period. So the market might really like that. It may have something to do with the mechanization of Deep South, which is maybe starting to finally pay off for them. Now we look at Woolies this morning. Those expectations on the right are full year numbers. So looking at the numbers on the left is you're comparing obviously two drastically different numbers. Always difficult to compare the half year numbers. But probably in terms of the headline earnings per share, looking broadly in line in terms of half year numbers. I'm not sure on the revenue side. Like I said, these things and the numbers are incredibly difficult to compare because of the David Jones acquisitions, all the new shares that have been issued, the way that they're accounting for that. I don't even have an opinion on it. So I just have to watch and see how it plays out. Later in the States, after the market closes, we've got AIG and CBS with earnings. All right, moving on to market data. We had some Japanese PPI numbers came in a little bit soft, but we had machine orders that were better than expected. That actually brought the yen a little bit stronger. I think those machine orders brought the yen a little bit stronger. But still no inflation there. You can see, these guys are just throwing money at at whatever they can. They're printing money faster than probably any government ever has in the history of the world. They still can't get any inflation in the PPI numbers. We've got CPI out of Germany at the opening bell. And we've got industrial production out of the Eurozone. And then later in the States, we have retail sales advance, initial jobless claims, and Bloomberg consumer comfort. All right, let's get into the maps. The first thing we'll have a look at this morning has to be the most important chart for us here locally. Sorry. That's the U.S. dollar ZAW chart, and that just says it all right there. That is the most textbook setup ever. Let me just back it out a little bit more. Let me go out to the 2-year here. Shorten it up. The reason why I want to do that is because you can see how big this level is. We were showing this the other day, and we actually had a one-day wonder, little fake breakout here, where you can see there that red bar, where the rand popped through to through this level down to about 127, if I'm not mistaken, and then the next day we literally reversed back up through that. False breakouts always lead to the biggest moves. That's exactly what we saw happen here, and you can see. We just absolutely ripped out of this bull flag on the dollar side, and I think we got a target all the way up to about 12.5 on the rand. I don't even think it's a question that we get there. I've been saying every single time we're breaking out, guys, it's not a question that the freaking currency moves lower. It's going to continue to move lower, and that's unfortunately the state of the current setup in the chart. There's nothing to stop it from going lower. There's no fundamental reasons to stop it from going lower, and there's no technical reasons. So most likely this thing is going to trade lower. We will see a 12 handle on this thing in the next 2 days, from my point of view, and I think that we'll probably test going through it at least on the first move. We'll try to get through it and just see if we can make a breakout through that level. So just watch it closely. There could be more room to run there. What's interesting there, we've obviously seen huge pressure on the back of MTN the last couple sessions, specifically because the Naira has been getting hammered, but it's barely even softer than the weakness that we've seen in the Rand. So these guys reporting in Rand, so it doesn't really matter what the Naira is doing versus the dollar. It really matters more what it's doing versus the Rand. Nevertheless, it doesn't really make a difference. This thing's starting to look more more like a bear flag after the other day finally looking like we had dropped out of this, this downtrend. Or not looking at it that way, but sorry about that. Oh man, how did I do that? What in the world? I don't know what happened here. There we go. Sorry about that. So we thought we were coming out of this downtrend when you look at it kind of this way. In hindsight, obviously that hadn't actually properly happened yet. And we've starting to look very bearish on this chart now. I think if we get below 205, then it's really a bit of a problem. Relative to, like I said, with the problems that we're seeing in Nigeria, the Naira blowing out here, and you compare the Naira to the Rand, it's not looking that hectic. So, I don't know how justified it really is, but I think it's obviously, it's a driving force that continues to push this thing lower, and we've got to pay attention to it. All right, looking at Standard Bank here, I just wanted to show, you can see that we made this huge move up, and we absolutely sprinted through to new highs, traded up to 160 quickly, but we're kind of coming back down just to test the breakout of where when we really popped through 150. And I'm thinking that we can come into a little bit of support here, maybe on the top end of this channel, which also kind of lines up nicely there. Maybe have a little bit of a bounce. The banking stocks have been soft the last few sessions, but they needed to be soft because these things have run so freaking hard over the last several months. All right, if we look at Amplats, this is another one that kind of was rejected a lot like the Rand. You had this false breakout, and we called this a few sessions ago, saying, and when it made that false breakout and reversed, we said if this thing doesn't get back above the 390 level in the next session or two, it's going to get hammered, and it has. If you see here, we're really kind of dropping trend support already, or not kind of, we are on a closing basis. So I think that this is a really, really poor effort at a rally by both of the mainboard platinum miners. You had Rio Tinto that came out yesterday and said that they're going to sell. Glencore came out yesterday and said they're going to sell their stake in Lonmin, which I think is just, that's just a big negative. You've already got Amplats that's looking to unload assets, and now you've got Lonmin who took a stake in Glencore who took a stake in Lonmin only probably 4 or 5 years ago, and they're already looking to unload it. That doesn't say good things about the platinum business in general, and I think that these stocks could show a little bit more pressure because of it. All right, the last one we're going to look at this morning is Essar. Essar had numbers yesterday. They tried to get back up here to get north of this 180 level. You can see this has really been a line in the sand. We failed off of it several times. I think that's a great level to watch. I'm really in the camp that these things have got further to come down. If you see the forward guidance on these things, it's shocking. They're probably looking to be lucky to make close to 10 Rand in a year's time. I think they're still overpriced. It just takes time for these things to really process the enormity of the underlying commodities moves and really reprice it in the stock. So like I said, I think from my side, I'm looking for every reason to sell these stocks on bounces because I think fundamentally that's where they deserve to be, is lower. And so yeah, I'd watch this thing closely. If we sort of drop out of this, maybe this little trend that we've been in recently, we drop some sort of support there, which is not really that technically appropriate. But I think that's the sort of level I'd be looking for it to say, okay, it's failed off of this 180 level and starting to reverse now. I'd be comfortable maybe selling it under that level if we got dropped there. And that's it for today, guys. Good luck out there.